Hey guys, welcome back to another video. In this video, I'm going to be talking about Eli Lilly, and we can see this company has been doing really well over the last year. It's up 150% down or up from $300 to more than $750 now, completely beating out the market's 28% return over the last year. So pretty impressive. Let's talk a little bit about their financial statements and then also look at their earnings results for the third and fourth quarter and also for the full year of 2023, and then also value their company using a DCF model so we could figure out if this is currently a good price to buy into the stock from a value investing perspective. But before we get into that, I want to talk a little bit about Eli Lilly's business model and how it is they actually make money. So Eli Lilly is a global pharmaceutical company that makes money by developing and selling prescription drugs for diabetes, cancer, Alzheimer's, and autoimmune diseases. Lilly also makes money through partnerships and licensing agreements with research institutions, pharma companies, and biotech companies. And these partnerships add revenue streams from royalties, milestone achievements, and also profit sharing from the co-development and co-sale of drugs. The key revenue driver for Eli Lilly is their ability to innovate and develop new drugs and medical treatments to expand their portfolio of consumer drugs for future profit growth. The company has a wide range of customers, including patients, who are the primary end users of these drugs, doctors and hospitals who prescribe the drugs, drugstores that buy medications to stock their shelves for prescription fulfillment to the public, wholesalers and distributors that act as middlemen purchasing drugs in bulk and distributing them across the healthcare system, governments who enforce rigorous regulatory quality control over Lilly's products and who purchase drugs through Medicare and Medicaid, obviously through these two means playing a pretty significant role in the adoption of Lilly's products. And then lastly, insurance companies that purchase medications for their insured members. So now that we've talked a little bit about their business model, let's look at their financial statements so we can get a better understanding of the financial health of the company. So right here, we can see the third quarter income statement, and it looks like revenue for Eli Lilly in the third quarter was about $9.5 billion, up from $7 billion. That's an increase of about 37% year over year. But unfortunately for the third quarter, it looks like they had a net loss of about $57.4 billion or $57.4 million, which is down from $1.4 billion of revenue or of net income in 2022. And this decrease looks like it came mainly as a result of an increase in research and development expenses, as we can see right here. So they were really prioritizing increasing their research and development, which is probably going to end up paying dividends in the future. Then if I scroll down here to page 7, we can see their balance sheet for the period ending in the third quarter. They ended the third quarter with about $58 billion of assets and about $11 billion of equity. So it looks like most of their business is financed by debt as opposed to equity. And then lastly, for the cash flow statement for the first 9 months of the year, they had about $4.5 billion of operating cash flow. And it looks like they purchased common stock of about $750 million and then also paid out $3 billion of dividends. So they purchased less common stock but paid out more in dividends. Either way, it seems like pretty good news for shareholders. Now we can see the fourth quarter, or this is more so the full year results. But although it doesn't really list it here, the fourth quarter of 2023, they had $9.3 billion of revenue, up 28% year over year. And then for the net income, they had $2.2 billion of net income, up 19% year over year. But it looks like for the full year, they also had an increase in revenue of about 20% from $28 billion to $34 billion. But unfortunately, again, for net income, they had a decline here of about 16% from $6.2 billion to $5.2 billion. Then if I go to page 59 here, we can see their balance sheet for the period ending in the full year. Looks like they had about $64 billion of total assets and about $10 billion of total equity. And then lastly, on page 61, we can see their cash flow statement. For 2023, they brought in about $4 billion of operating cash flow. And then it looks like they also paid out about $4 billion of dividends and purchased about $750 million of common stock for the full year. So they returned almost all of the operating cash flow that they produced in 2023 back to shareholders through dividend payouts, which is a pretty good sign for shareholders. It looks like they got a pretty good return this year, both from the stock market increase and then also from the dividend payout. So now I want to look at this discounted cash flow model, or this valuation model, to try to figure out Eli Lilly's intrinsic value per share. And it looks like right here, unfortunately for Eli Lilly, over the past 5 years, they've had negative free cash flow growth of about negative 26% year over year. Looks like in 2019, they had $3.8 billion of free cash flow. And in 2023, they had $790 million of free cash flow. So I'm going to have to use a different valuation model here. So instead, I'm going to use a relative valuation model, which basically compares Eli Lilly to other healthcare companies in their industry, other competitors, and then compares their price to earnings ratio, price to sales ratio, and price to book value ratio to try to basically value Eli Lilly's company against the industry average. It looks like the industry average for PE ratio is about 362. The results are definitely skewed because of this large price to earnings ratio for Merck, sitting at almost 1,000. But then the price to sales ratio comes in at about 4, and price to book value ratio at about 5. And then you can see the beginning earnings and ending earnings from 2019 to 2023 for the for the 4 companies here. And then you can also see the same thing for cash flow metrics. Looks like a lot of these companies experienced negative free cash flow growth over the last 5 years, with the exception of Merck. And it looks like over the last 5 years, Eli Lilly is the only company that experienced positive earnings growth, whereas the other companies were all in the negative. So take that as you will. Looks like Eli Lilly could improve their cash flow growth, but earnings growth has been pretty healthy for them. And then if we look at the final result here, intrinsic value per share for Eli Lilly for PE ratio divided by shares for the average is estimated to be in the 2000s. Probably not very reliable considering how much higher this metric is compared to their actual share price of around $750 per share. But it looks like for the price to sales ratio, price to book value ratio, these are sitting around $58 to $150. So again, these are pretty low. So you probably want to somehow average these out. But again, because Eli Lilly has financial metrics that are a little bit skewed, mainly as a result of the outlier financial results they've had for cash flow and also for earnings this year as a result of the increases in investments in research and development, it's a little difficult to value their company using the most up-to-date metrics. So unfortunately, it looks like we're not going to be able to get a really good tell on what the actual value of Eli Lilly is. But if we are able to look at their stock price here, their stock has obviously increased quite a bit, and it looks like their PE ratio at the moment is about 130 times earnings. So it could be slightly overvalued, but if investors are pricing in that Eli Lilly is going to grow more in the future, then it could still present a good buying opportunity at the current share price. So if we go to the right-hand side here, I did an industry analysis comparing Eli Lilly to 2 of their main competitors, Johnson & Johnson and Pfizer, and from a profit perspective, it looks like Eli Lilly is the most profitable company out of the 3, with an 80% gross profit margin and a 15% net profit margin. They also pay a dividend, although it's the lowest dividend yield out of the 3 companies. But then again, Eli Lilly's stock is up quite a bit over the last year, so it probably makes up for the fact that their dividend is a little bit less than their 2 competitors. Lastly, I wanted to compare Eli Lilly to some of the other companies we've looked at on this channel. Obviously, we weren't able to use a DCF model for Eli Lilly, so I'm not going to include them on the intrinsic value table, but you can see the top 10 companies we've looked at thus far that were trading below or pretty much right there next to their intrinsic value per share. Then we can see for growth rate, Eli Lilly was a little bit higher before on this list. They had about a 20-something% growth rate. But because of the updated metrics, I updated them and bumped them down to the last place spot. And they probably won't stay here for long because they're sitting with a negative growth rate value. But you can see the top 10 companies here, starting with ExxonMobil at 44%, that had the best free cash flow growth over the last 5 years. Then we can see for dividend yield, Eli Lilly's dividend yield was pretty low, sitting in the decimal percentages here at about 0.78%. So that's not good enough to get them onto this table. You can see the companies right here that are paying the highest in dividend yields, a couple of oil companies, and also Pepsi and Coca-Cola as some well-known dividend-paying companies. Then we can see in terms of profitability, Eli Lilly comes in third place with their 79% gross profit margin. Obviously very impressive, but for net profit margin, they were only at about 15%, so it wasn't good enough to get them onto the net profitability table. You can see the top 10 companies here: Occidental Petroleum, Adobe, Nvidia, and then actually Eli Lilly is at the bottom here, so I should probably update that. It's about 15.36%, so I'll put that in right here. Then we can see right here for Q4 and Q3 year-over-year revenue and earnings growth. Eli Lilly made it onto the table, or both tables, for Q4 with 28% revenue growth for Q4 and 19% earnings growth. Puts them in first place on the Q4 year-over-year revenue growth table. And then also on the Q3 year-over-year revenue growth table, they also come in first place with 37% revenue growth, but they also had earnings decline, or a net loss really, posted in the third quarter, so they don't get onto this table. Looks like they also made it onto the Q2 revenue and earnings growth tables. So quarter to quarter, it looks like Eli Lilly is pretty competitive with the rest of the companies we've looked at on this channel. Could be a good sign, and obviously it seems to have been reflected on their stock price. Their quarter to quarter revenue growth and slight quarter to quarter earnings growth almost here has definitely been reflected in the near 150% return they've seen on their stock price. Lastly, for stock performance over the last 5 years, it looks like Eli Lilly is up a little over 500%, just around 500% here. Puts them in fifth place, right behind Kura Sushi, AMD, Nvidia, and Tesla. So let me know in the comment section down below what you guys think of Eli Lilly. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.